you going, Steve?
Yeah, good, Sam. Yourself?
Yeah, pretty good, man. Today I just wanted to have a chat with you a bit more about commodities and probably dive deep into more other commodities that we haven't gone through in the past interviews. I'll dive into this straight to the first question. You've been bullish on gold, silver commodities, but I also want to explore what commodities you like most and how you invested in them.
Yeah, cool. Good question. Well, at the moment, so I look at commodities, I break them up into multiple categories, I guess, but pretty much you can just put them in two categories: hard commodities and soft commodities. Soft being, foods and stuff. And so I've got one of my analysts at the moment who, Benji, who's doing some work for me. I've given him a task to find me some farmland and some fertilizer companies that meet certain criteria. And so he's analyzing all the stocks available that meet the criteria that I've set him. He's shared a couple of his stocks that he's found so far. So look, that is something I've got a little bit of exposure to in the soft commodity sector. However, moving forward, I want to invest more in that sector. I think food is going to be very important in the years ahead. And even the United Nations is talking about food shortages and whatnot there. So that's a demand that we all need. We can't go without food. So I've got a little bit of investment in that play, but I'm moving more into it. But I'll let Benji do his work, and maybe I'll share in another video a little bit more detail into what Benji has done there and how I've invested. But what I do want to do is I'll share my screen.
Yep.
I'll show you some charts. So, all right, can you see this chart of iron ore?
Yep, see that.
All right, so iron ore is, huge for Australia, for our economy, and we've certainly had a good run of it. You can see it got up over $220 a ton there. Now, we about a month ago identified a weakness in iron ore. We thought that iron ore was overvalued. We looked at what's happening in China, looked at the macro in China, and also with Evergrande, the largest property developer in China. And so we came to the conclusion that China will not be needing as much iron ore, and in particular iron ore from Australia. And this chart is obviously validated that call for us. However, what we did was, I won't name the stock, but a very large company in Australia, we bought some, we started buying some put options and bear call spreads on this stock, particular stock, and it has come down significantly from its all-time high. Once again, we thought overvalued, and so far those positions are up very, very nicely. We're up 300-400% in those positions. However, we are still more bearish moving forward. We think iron ore can fall significantly more, well under $100 a ton, and we believe this stock that we've shorted through options is also going to fall a lot more. Now, it's also a stock that I've owned, and it's a stock that I've traded options on quite a lot for a long time now, actually, for many, many years, probably the last decade. I've traded options on this one. So it's a company that I follow significantly. So sorry about that. Should have put my phone on silent. So yeah, we are bearish iron ore and bearish, this particular stock. But One thing, and I've mentioned in a couple of my videos, so those of you that follow my channel will know that I've spoken about coal before. So if you have a look at this coal chart, this is a beautiful chart. Now, Sam, what do you think has been the best performing sector or stock since the 1990s to now? Any idea?
I'll just take a wild guess. Coal?
No. Cigarettes. Now, in the 1990s, cigarettes was, demonized, rightfully or wrongfully so. Up to you. I don't smoke. I'm not a smoker, never have. We had banning on advertising, and sponsorship from cigarette companies all around the world. Formula One had to, Marlboro couldn't sponsor the McLarens anymore. And you had the Cricket World Cup, Benson and Hedges, and you had in Australia, the Rugby League Winfield Cup. So that it was just demonized. And so cigarette stocks in the 90s were trading on the most tiniest of multiples. And if you have a look at any chart, they've been the best performing stock out there, full stop. Now, what's the right now? We're in this ESG green, what do you think's getting beaten up the most as the most evil thing on the planet right now?
Yeah, it's coal.
Coal. So last year, by the way, this whole green thing, and I can't discuss it on YouTube, or they get upset. But this is something that I've studied for a decade or longer. This was a passion of mine, looking at this whole global warming, climate change, climate catastrophe movement, all this so-called green energy. And I've invested in it, made a little killing on some so-called green investments, which don't work, but thanks to companies like Shell that want to virtue signal, put the company office for multiple times, and we made a killing. So anyway, there's those of you that want to know more about this, what I would suggest is follow a hedge fund manager by the name of Chris MacIntosh. I will put a link in the description below in this video to his blog, free blog. I suggest you follow his work and have a look at him. You can't share his stuff on social media because they won't allow it. He's basically being banned from social media. He's just a hedge fund manager looking at the data, looking at the science, looking at the reality. And I mean, even what's that communist fellow, the socialist guy, the fat guy in America? He did that video. What was it? Planet of the Humans or something?
Yeah, with the glasses. He always wears a hat.
Yeah. He was in that Team America. They portrayed him in Team America, which was hilarious. Anyway, you watch that documentary that he did, and he exposed the BS that is green energy. Now, there's bits in that documentary that I disagree with and whatnot, and his solutions and whatever. But anyway, so if we remove coal and oil, right, all you have to do is look around in your room, and just about everything in your room is made from oil. This reality that we can get rid of coal and get rid of oil and we'll have a wonderful lifestyle is baloney. The Indian energy minister last year came out and said that they will be buying a lot more Aussie coal in the next couple of decades ahead. So, whatever. So anyway, last year, coal was absolutely demonized. The coal price was down. I bought some coal companies, and the cheapest coal company I bought was at 1.8 times earnings.
Yeah.
1.8 times earnings. Some other coal stocks I bought were trading around 4 times earnings. I mean, these stocks are almost being given away. So the free cash flow that I'm getting on these stocks is unbelievable. The dividends I'm getting on these stocks is unbelievable. So am I adding to these coal positions right now? No, I'm not, because I'm pretty loaded up on it. If there was a pullback in coal and in these particular stocks in particular, I'd certainly add more to that position. They're still relatively cheap. However, this is a deep value play for me. Those that understand value investing, this is a deep value play for me. But coal, very bullish on. Natural gas, obviously, you have a look at this chart. Natural gas has done extremely well over the last 12 months. I've got some small positions in natural gas. Pretty much companies that you know, some larger firms that are also in the oil game, natural gas game, and I pretty much trade covered calls. By the way, those coal positions that I mentioned before, those stocks are up 200% plus, or 100% to 200%. Some have gone up more than 200%. Others have gone up a bit over 100%. But I've more than doubled my portfolio there in that coal sector. Yeah, so where the natural gas and the oil, so we have a look at the oil chart here. I think in a previous video that we did, Sam, you asked me what I think will be the best performing asset or whatever by the end of the year. I can't remember one that I said, but the other one I said was I could see oil being $90 a barrel. And I still don't rule that out. You know, I do like oil because I know the reality of how stuff is made. And there's no investment in oil exploration happening at the moment. And so the demand for oil is going to be there for a long, long time, while the supply and the investment in that exploration has just been completely shrunk. So over the longer term, absolutely bullish on this whole energy sector. By the way, these so-called green things require a lot of mining and a lot of minerals to build, whether it's solar panels, windmills, electric vehicles, you name it. Go have a look at the minerals and metals that are actually needed to construct these things, and then have a look at their life expectancy, how they then get recycled, and so forth. Like, it's anyway. But these companies that I've got in the crude and natural gas sector, they're probably only up about 20% over the last 12 months, but I trade covered calls on them for income, and you know, I'm making 2.5% a month in income on these stocks, and yeah, that's still trading out of the money covered calls. So, you know, I could come closer to at the money and make even bigger premiums, or in the money and make larger premiums, but I still see upside in these things. So I like to trade or sell out of the money covered calls to get that appreciation, and to be honest, hopefully not get exercise, but occasionally I do, and you know, that's okay. There's some ways around that you can continue. Uranium, you can see the chart of uranium. I'm actually very bullish uranium, because really this is the only real green base load power that doesn't emit CO2 emissions. Now, CO2, that whole debate, once again, not going to get into it. I've studied it, and you know, it's I could list thousands of scientists to follow that call BS on this whole whatever, but that's for another discussion on another platform. But I do see things changing in the uranium space. So, you know, once upon a time, politicians were just full on anti this. There's less anti-uranium or nuclear power, should I say. You know, so I think this is going to be a good play longer term. Copper, when we look at the copper chart, so it's been trading around that $4.50 mark for some time. But I'm still bullish copper moving forward, because whether we like it or not, we are moving to this electric vehicle, solar panel, green electrification of the economy, let's put it that way. And so there's going to be a lot of demand for copper. Now I've got some copper producers, but I'm heavily invested. In fact, it's my largest small cap position in an explorer, which has found a bucket ton of copper here in Queensland, in Australia, where we live, Sam. So I'm very excited about that. And actually that stock's come off about 30-40% from its all-time high. So it's actually screaming buy me at the moment, and I'll probably buy some probably this week. So copper, obviously, cobalt, nickel, zinc, all of these type of commodities, very heavily invested in. In fact, I've got a stock that's it's an exploration stock in Europe, and I'm very excited about it because they've literally found high grade and large deposits of zinc, nickel, cobalt, silver, copper, you name it. And they're very close to smelters. They've also got this big dam, which they're going to convert into hydroelectricity. And so this mine, and it will become a mine, will be the first green mine run by hydroelectric energy. And so with this whole ESG movement, I think a lot of big fund managers, a lot of big firms with this whole, virtual signaling stuff is going to pour into this explorer because it meets all their little, oh, look at me thing. So yeah, very, very excited about that. Now, yeah, so that's kind of the commodities, I guess, that I'm investing in at the moment.
Yeah, what do you think about lithium?
Yeah, look, so I didn't touch on that, so let me share my screen again. I did see that chart up there. Let me show you something else first before we go to the lithium chart. So let me know when you can see this.
Yeah, I can see that.
All right, so this is a chart from Macquarie Research. Now, what Macquarie are saying is that battery demand is expected to increase tenfold over the coming decade. So by 2030, lithium demand will be 10 times it is today. However, have a look at this chart. So this is lithium market surplus and deficit. We're going into a massive deficit here. So, it's basic economics. You don't even have to be an Austrian economist to work out when you have a deficit of something and a demand for something, what happens to the price of that underlying asset. So, and once again, whether we like it or not, different governments around the world have now legislated to ban all petrol and diesel powered cars by whatever date, and we all have to be, driving EVs and whatever. And so absolutely very bullish on lithium. So let me just, let me show you, go back here. Let me know when you can see this lithium chart.
Yeah, I can see that.
Yep. Okay. So if we go 5 year, so it's obviously down quite a lot. So it's still very cheap, in my opinion, right now to be getting into. And there's some really good stocks out there as well. So, yeah, but I'm very bullish. So pretty much all these commodities I'm extremely bullish on, and a lot of it's got to do with stupid government policy, and so yeah.
Yeah. Very interesting. Yeah, with all the you know, the green environment, the EVs, what's your thoughts, in that scenario on lithium, given the move to going towards green environment?
Say that again.
So with all like the EVs and
Yeah.
the move to the green environment, what do you think of lithium
Yeah.
in that scenario?
Yeah, no, as I said, I think it's bullish. And so there is that demand happening there. And the chart that I showed you from Macquarie shows that there's actually going to be a deficit of lithium moving forward. So the price of lithium, I think, is going to explode. And so if you've got some very good stocks, some very good companies that mine that thing, their free cash flow is going to be huge. And expect a lot of currency floating into that market in the years ahead. So definitely getting in now. Like we've already seen that run, as I showed the chart before, off its bottom, but it's still not near its all-time high. So it's still undervalued. Yet we know the demand over the coming decade is going to be huge in that space. So very much very bullish on that.
Yeah. So we've touched on this question. This will probably be the last one, and then we can wrap up. Which metal do you think will be the best performer in the rest of this year and next year in 2022?
Well, if you listen to Jeff Christian, I think he said he believes Iridium will be the best performing metal, or at least he's argued it has been the best performing metal. I still think towards the end of this year, silver, and 2022, I still think silver will be the best performing metal on a percentage basis. Silver is still severely undervalued. In fact, if you look at the mining ratio, you look at where gold is right now, silver really should be valued at around $270, but it's not. Silver's all-time high is $50. What's it now? 24. So it's still 50% off its all-time high. So with everything going on, whether you measure, silver in terms of the currency supply, in terms of the S&P 500 or the Dow or real estate or any other asset, silver is severely undervalued. And I know there's a lot of frustrated silver investors out there, yours included. However, every time there's a smash down, it's an opportunity for me to accumulate a little bit more physical, because I just like accumulating physical. But to be honest, where I've been pouring a lot of my dollars into is in the mining sector and exploration sector. And so, there's a little silver explorer in Australia that I'm very excited about. Once again, I'm heavily invested in. It's probably my second largest position in the small cap sector, which is likely to become a producer by the end of next year or early 2023 at the latest. And as I said, they're sitting on, in previous videos, they're sitting on, close to $10 billion, worth of deposits there. And it's all high grade, and just the environmental impact where they are, it just ticks so many boxes for me. So, but I'm also invested in a company, I'll name the company, South32. They're a spin-off from BHP. Now, they fell down to about $1.70 in March last year. And we certainly did some trading around there and made some dollars, both shorting it and then buying some call options and whatever. So definitely that was fantastic. The stock, I actually haven't checked it for the last week, but it was about $3.30. So from $1.70 to about $3.30. I don't know if it's higher or lower. I don't know. I haven't looked at it for the last week, but we trade cover calls on that. So we own it and we just sell cover calls, and they actually own the largest silver mine in Australia. They've actually got a diversified range of different assets and different commodities that they mine. But yeah, they're the largest silver miner. So we've also got that exposure to with South 32 as well. And they pay a really good dividend, fully franked dividend as well. But they are a bit pricey at the moment. We're definitely not buying at these prices. It's a stock that we've also shorted in the past as well. So, So in terms of metal, I still think silver will probably be the best performing metal. Platinum's looking interesting. Like to get platinum a little bit cheaper than where it's at. But to be honest, when I look at the macro economy and the monetary system, where it's all at the moment, I kind of only want to own gold and silver. I don't want to get too cute with the other metals. Gold and silver are monetary metals. Yes, silver and gold to a small extent can be used in the industrial sense, and there's that industrial demand, especially for silver. But from a monetary point of view, and here's the thing: this is people keep asking me, and I hate giving investment advice. I really do, because someone will go buy a particular stock or buy silver or something, it'll fall 30% and they cry, or it falls 50% and cry. I couldn't be happier, because my thesis hasn't changed and my belief in that company hasn't changed. It's just gone on special. And so it's given me an opportunity to buy more. Now, if that makes me cry when it goes down 30 or 50%, then I shouldn't have bought it in the first place. I shouldn't have bought it in the first place. And really, that's why I don't give financial advice. It's why I'll never give financial advice. I love investing and I love buying things, and I love seeing things after I bought them go even cheaper, because I buy even more. Unless things have changed, the story has changed, the macro has changed, the company has changed, whatever. However, things haven't changed. You look at stocks, severely overvalued. Look at real estate, severely overvalued. Bonds, severely overvalued. You look at every asset class, severely overvalued. So where do you want to put your currency? With the debt, just the craziness of our monetary system where it's at the moment, where do you want to put your currency? Do you want to put them in these overvalued assets? For me, and I'm not 100% in gold and silver, all right? And I've shared this before. I have a portion of my portfolio in physical gold and silver, and then the rest is in gold and silver producers and explorers. And then even that is still only a percentage of my portfolio. However, it probably adds up to about a third of my portfolio now, between physical and the stocks. In fact, it's probably a little bit more than a third between that. So in terms of physical, I'm probably at about 15% physical gold and silver. Only because I've been adding, it was higher, but only because I've stopped adding to my physical, and I've just been increasing my mining and exploration positions, and therefore my portfolio as a percentage, that physical's just fallen to about 15% of my portfolio at the moment. So I still think silver is got so much upside, and that'd be
and like you give a good point. Like, if your thesis hasn't changed and you believe the asset that you have your money in is a good asset to invest in, that's what you should base it on, not base it on the price of the asset.
Exactly. And so I'll give you a bit of an example. Some of the work that Benji's doing for me right now, I've already got an idea of what stocks I want to own, but I want Benji to do the analysis as well, and hopefully he comes back with the same sort of stocks that I've got ideas on. If he doesn't, he's provided some others, and we'll have a discussion as to why, because maybe there's something I've missed, and occasionally I make mistakes and whatnot. But also, the last thing, I don't want him looking at price, and I don't look at price. I look at I value a stock. I look at all sorts of different things, like return on equity, return on capital, what's its debt to equity ratio, its book value, what's its earnings yield growth been like, what's its dividend growth been like, so I look at a whole range of factors, and then, I discount cash flows as well. So, there's a whole range of factors going into that. And then you look at it and you go, okay, well, I think it's valued at X, Y, Z. And then you look at where it's, its current share price. So that's the last thing you look at. And is it undervalued? How much undervalued? You're getting a 10% discount, 20, 30, or is it overvalued? And then sometimes I use options to get into that stock, whether it's selling naked puts or whatever. So, anyway, that's just my opinion.
Yeah, for sure. Anyway, we'll have to wrap up there. But
right.
it was really good chatting with you, Steve. Looking forward to the next one.
Awesome. Cool, Sam. See you next time.
Catch you later. Bye.